So brokers, I have Shah Tehrany. I pronounced it correct, right?
Yeah, for sure.
So Shah is a mortgage broker owner. He started his company just literally last month. He got his license approved in February. Prior to that, he was working, running a branch of a brokerage, has a pretty big team. How big is your team?
We're 27.
Okay. And how many of that's originator versus processing and fulfillment?
It's 12 originators. And then the rest of it is like operations and production support.
So you guys are historically, not right now, but basically a 90-10 purchase shop?
Yeah, probably a 90% purchase, 10% refi.
Got it. And obviously right now, New York has more coronavirus cases than any country. So you guys are hit the hardest. How is it, maintaining purchase business, relationships, everything right now?
It's challenging, right? So it's like we're impacted severely, but so is our realtor community, right? It's hard to show houses right now. The contract flow is down considerably. We have a lot of purchases in the pipeline. We came into March and April with a pretty substantial pipeline. The challenge is a lot of our buyers and borrowers are impacted by COVID-19, and so the ability to close has become challenging. I think the SBA loan that was deployed, the PPP, has helped, and I think a lot of people are still getting paid, but there's pretty significant impact. I think some purchases died. I think we're seeing about a 12% runoff in purchases that we actually had to issue denials to help our consumers get their down payments back. But the rest of them are probably just delayed and will turn into May and June closings. Surprisingly, we've actually had some closings. They've been interesting, buyers in one room, seller in one room, attorneys in another. So, but we made it work. We're doing the best that we can, and every day is just about looking for the win. What can you win at today?
Yeah, I think it's crazy because New York is, everybody knows, it's an attorney state. So on every purchase transaction, you got a buyer's attorney, a seller's attorney, and sometimes a bank attorney, correct?
Yeah, every single one.
So that's a lot of coordinating. It's a lot of, people that are set in their ways for the most part. So I can only imagine how challenging that is right now when everybody's on lockdown.
It's tough. Everyone's remote in New York for the most part, right? And some of the other states are perhaps less impacted. So you see more people actually going to the office and business being able to continue. But we're pretty much the whole state's on lockdown.
And talk about, so you started your brokerage last month. We talked a little bit offline before we got started. A lot of people out there that are correspondent. You kind of shared some of the comments that I had expressed to a lot of people, which is, there's a lot of risk to be a mini core right now, especially right now. There's a lot of risk, period. But for you, you kind of said, hey, listen, I'm committed to being a broker. Talk a little bit about, the why behind that.
Yeah, I mean, I just, I like the risk model. I think the broker model is a great model. I think it's transparent, not only to my team, but also to consumers, right? I'm not looking to hide anything. I want to be transparent. I like that model. I like, the risk profile of that model. The non-delegated correspondent model it has a lot of advantages, but for me, I prefer the broker model, and I'll stay broker model in every state that I operate in. I have no plans of ever trying to shift to that. And to be honest, it works great. It works really great. My team loves it. Everything's fully transparent, and consumers don't mind. They don't have a problem with seeing what you're getting paid. Most of our transactions are lender paid anyway. And, it's the lender that's paying us. And as long as you're taking great care of your client and giving them a tremendous service and giving them a great deal, it's really, in my opinion, the superior model.
So, for you guys, you had your branch, basically your team of 27 people for quite some time. How long did you have that group together?
A lot of our crew dates back like almost 10 years now. So, we were a smaller group. We were like 10, 12, and we've started, in November of 2018, I left the retail business after being in that for like 10 years, almost 11 years, and jumped onto the broker side, joined one of my friends. His company became a branch of his company, Affordable Financial Services in New York. And with the intent from day one before I joined him, I expressed to him that, hey, I'm going to file for my brokerage license. New York takes quite a while to get a license. It's probably the most challenging state actually to get a license.
It is, for sure. How long did it take you guys?
It took me about 7 months, actually, which most people said was super fast.
Super fast. I think that's because you're in New York. If you're out of New York and you want to get that license, I know when Garden State did it, it was like 14, 15 months.
Yeah. And I heard they're running like 2 years right now.
That's incredible.
Yeah. So we got it. And then, because we operate predominantly in New York, about close to 80% of our business is actually in New York. We knew the regs. We knew how to operate in New York. That's the big challenge for folks that are not in New York, is it's challenging to know how to operate in New York. There's a lot of nuances that are very just specific to New York. But, got my license and made the transition, had to move offices, for compliance and regulatory reasons. So we did. And we got up and running and things were great. And March was a record month, awesome. I think for a lot of people. And then boom, coronavirus.
So we talked a little bit about, kind of mindset before we got on here. And you're somebody that I text, we text and exchange messages either on Instagram or text message, at 5, 6 o'clock in the morning. How are you keeping, your team positive? I know we did a podcast with Ben Lavender, who's one of your top LOs. And, Ben talked about, the influence you have over him. I think he was your LOA at one point.
Ben's my cousin. So
really?
Yeah. So he started in the business not knowing anything. He was, he just came in and we always had a good vibe, me and him. And I always recognized that he was a very bright kid. And he was a little younger than me and always loved Ben. And I was like, I think you should take a look at this. And he came in and it was kind of a natural thing for him. I think he was a little more, by his own admission, felt a little more introverted, but he was he was a really detail-oriented person. Taught him the business, got in, and he just kind of took off, right? He jumped out and started doing really well. And in terms of mindset, look, life's going to throw you challenges, right? Like, this business is not, I think, somebody I respect a lot in the business, Matt Ishbia, told me, is like, it's not always going to be peaches and cream. So get ready. And he was right, because the first month after I was in operation, it was like, here's a huge challenge that you have to deal with, right off the bat. So it's, look, challenges make you stronger, right? There's nothing we can do outside of, decide that we're going to just continue to try and be very successful and work hard and be focused. And, for me, it's just about communication. Communicate to my team. We got all the advantages of you contributing to us and getting all these great speakers on to educate us on, hey, here's what's coming. Here's what's coming. Here's what you can expect. And here's the adjustments that you need to make to adapt to the new environment, whether that's 60, 90, 120 days. And that's what we're doing. We're still communicating. We're doing a ton of Zoom calls. I became a pipeline manager, jumping back in that, which is fun because I dig, being in the weeds. I like being in the trenches and battling and getting loans to the table. So that's a lot of fun for me. And everyone, we're still closing loans.
That's really the thing that I keep telling everybody is like, yes, the disruption's starting to happen when it comes to certain parts of the market, when it like purchase specifically. Yeah. But the truth of the matter is when you're in a business right now where your rates are in the low 3s, you're able to make, lender paid compensation at those rates. And you have a whole database of loans that you can tap into. I had somebody I had a late phone call last night and somebody was like, well, I'm so worried about this forbearance issue. And if I close a loan, if the person, goes into forbearance, I got to repay my comp. And here's the way I look at it. I'm like, don't count your chickens before they hatch then. If you have the mindset of saying, hey, I'm not going to spend this money. I'm just going to be like, here, $5,000, put it in the bank account. Yeah. And if it's still there after 3 payments, then great, it's house money. If not, then, it is what it is. But if you close more deals right now, the percentages tell you that 1 out of every 5 people are going to lose their job. That means 4 out of 5 aren't. So it's still, a numbers game, and it's still a lot of opportunity out there.
Yeah, totally. And I think it just comes down to understanding that this is what happened. This is the dynamic that we're in, and you make the best of it, right? You focus on what you can control, right? You can control going after higher quality transactions that meet the overlays of the current industry, right? You can control that some of the deals that we're fortunate. New York City has so many city workers and nurses, and we do so many loans for NYPD and FDNY and MTA and corrections, and the list goes on and on. Doctors and nurses, and those people are, for the most part, are all employed. So focus on those transactions, focus on your pipeline, focus on getting your VVOEs done so you can close those transactions. And accept the fact that you're going to lose, 10, 15, 20%, maybe as high as 25% of your pipeline. It's temporary. And focus on like, hey, okay, Q2 is going to suck, right? I'm not going to be at my normal level of numbers, right? As a broker, if you write 5 deals alone as a broker, you might write 3, right? Focus on what are you doing for Q3, for Q4? How do you set yourself up? If you're not as busy, great. Focus on all those other things that you've been wanting to do that have been on your list and execute those things now, right? This is the time to do that.
Even on so like in New York, the thing that, a lot of people might not be familiar with if they haven't done loans in New York is even on a refi, the process takes a nice amount of time. Like in New Jersey on a refi, you get that thing clear to close with the right lender. You can go from start to finish and close a loan within, 10 to 15 days every single time. In New York, it's a process. Tell us a little bit about that.
Yeah, so New York's unique in that, let's talk 2 different ways. One is the refi side of the business. On the refi side, you can still close loans in 10 to 15 days. The challenge is the loan amounts are higher, and if you're in specifically the 5 boroughs of New York City, there is transfer tax, a mortgage tax, which is between 1.8 and 2% of the loan amount.
Every time.
Every single time. That's expensive. If you compare it to New Jersey, for instance, New Jersey's a low closing cost state. Massachusetts, a low closing cost state. Maryland, a low closing cost state. New York is a super high closing cost state because of all the recording fees and title insurance and mortgage tax. You can do something called a SEMA on the refinances, but that takes getting the note from the original lender and multiple attorneys involved, and that can take like 7 to 8 weeks.
Yep.
Right. So the refi side is challenging if you're doing a SEMA. If you're not, you can still close in, I'd say 15 to 20 days is a more realistic window because you're pulling municipals and title and some of those other variables.
And still have an attorney and a bank attorney.
Say again, I'm sorry?
Still have 2 attorneys involved, right? Bank attorney and
a bank attorney. If you do a SEMA, there's also a SEMA attorney. So no matter what in New York on a refinance transaction, your deal has to be settled by a bank attorney.
Got it.
Right. On the purchase side, same story. You need a bank attorney, but the buyer has their own attorney, the seller has their own attorney, and then there's a bank attorney. So you got 3 attorneys involved in the transaction. And the standard in New York is more like 60 to 90 days for a closing, right? We're clearing the loans so quickly that typically what we find is that we're sitting around waiting for everyone else. We're waiting for the sellers to be ready, the sellers' attorneys to be ready. If the houses are vacant and like it's a flip or an investor house or just happens to be vacant, we can close those deals typically in 30 days or less, right? But there's a lot of nuances, title, attorneys, making sure all those parties are communicating. And then once you get clears, getting it scheduled. And it's a challenging state to operate in.
Yeah, it's not, when you think about having a loan in your pipeline, for 60, 90 days, especially during a time like this where guidelines are changing and people could lose their jobs and everything, like that can be dicey for sure.
Yeah, it is. And the other thing about New York in general, and I think what's challenging is that we have the New York State Banking Department is a strict regulator, right? They're very specific about their guidance. They're very specific about how they want things done and what your requirements are as a broker. And they really are on top of you, right? A lot of other states are not so much,
around either. Like they're really they're for the most part pretty aggressive.
They're aggressive, New York, and we don't mind that, right? This is an aggressive state, so New Yorkers are aggressive. We don't mind it. It just means you got to be really thorough with your compliance and your quality control, and you got to make sure that you do things correctly and that you follow that guidance and you're on top of it and do things properly. And if you do, you're good, right? So that's where our focus is doing that and just trying to be timely and efficient and scale. And so far, so good. It's all good. Even with coronavirus looming, we're still doing okay, and we'll be just fine.
I honestly think going through the experience of having New York as one of the states that we're licensed in, it really, from a standpoint of like compliance, it makes you really focus on compliance in a very big way. And the truth of the matter is, like, the other states, it's, you get an examination every 2 years. New York, first year out the gates, they're gonna be knocking on your door, and they also send you an invoice every quarter. Like, they're no joke. But at the end of the day, what it did give us the confidence of is, like, hey, if we are compliant in New York and we have our stuff together here, we can be licensed anywhere.
Exactly.
It's the truth.
And I went for my conferral to pick up my license, and look, they're super nice people there. They're super fair. They're super reasonable. They're a great regulator, right? They're just very specific about how you're allowed to do things, right? And you have to read those rules, and you have to follow them, and you have to be timely.
So talk about, like, as far as, like, you have a positive mindset, you're focused on growth. And when it comes to managing your team, when it comes to building your business, what are the things, the habits, the things that you focus on that keep you moving forward, that keep you not just saying, hey, these are the good times and it's easy to make money, but actually we want to succeed and grow?
Yeah, so I think that's a great question. I think so much of what I always focused on, I stopped originating about a year ago just to focus on running the business. So I've been a top originator of loans, and I learned early on in this business that it's just about detail, right? So I didn't want to be a big refi guy in my career. I started in refis on a low level, when I was learning the business, and I was like, I don't want to do this. I'd rather do purchases, because I always felt like that refis would go away. If rates went up, it would be challenging. Now I'm 14 years in, and there's still a ton of guys that are doing a ton of refis, but I've always been purchase focused. I've always been referral focused, right? Building relationships that send you business, so I don't have to buy leads and do that. And then look, for a realtor, you're only as good as your last deal, right? If you screw that deal up, if you don't calculate the income correctly, you don't take that application correctly, and you're not detailed and diligent about it, you're not getting a written VOE to confirm overtime income in advance of issuing a pre-qualification, and you mess that deal up, you're not getting another deal from that realtor, right?
That's right.
Yeah, so it's always about, like, managing your relationships, managing your referral sources, giving them tremendous service, taking great care of your clients. And every loan officer that's partnered up with me and joined me, I've always been trying to cement that in and help them understand from a procedural standpoint, what are best practices to approach the business, so that you can build a business of referral relationships that just keep feeding you, because you answer your phone when they call you. When they give you a deal and you say it's pre-approved, as long as they follow your purchase parameters for what the purchase price and the taxes are, that deal's closing, right? And that's sort of always how we focused. And I think my team does an exceptionally good job of sort of managing that mindset and knowing to approach the business that way. And it's led to us being very successful. And then giving them the resources on the back end to help them, right? To be able to make sure that the loans are processed efficiently, that when they need production support, right? A lot of my loan officers have loan coordinators that do a lot of the administrative tasks, chase a written verification, follow up with clients to get documents to ensure that before we issue a pre-approval, we've really done a forensic pre-underwrite of the file to make sure we know that loan is a transaction, right? So that our submission to funding ratio is in the high 90% range. That's our focus.
So as your guys have made this transition, when they went retail to broker, I'm sure there was a lot of, hey, one of the big things I always hear about is the appraisal adjustment's a big one, going from, having kind of a captive AMC to, having a real AMC that's not captive. Those hurdles and those issues that you dealt with, did you lose any guys? Was everybody kind of make the transition, happy about the transition?
What was unique about New York is a lot of the retail banking organizations in New York. FHA is a big part of the purchase market here. Home Ready and Home Possible were actually, and then they reduced the income limits on them pretty substantially and sort of stepped out of that business. So FHA was a big part of what we were doing. 75 to 80% of our purchase transactions were that way. And so the margin that those other retail institutions, including the one I came from, they were between 4 and 5% compensation, some even higher than that. So moving to the broker world and, being capped at a 2.75% was really a blessing in a lot of ways. And it opened up our eyes to the fact that our rates are so much better than most of our competition in New York that it became easy. Like, we got a 75% bump in transaction volume when we stepped over from retail to brokerage, just because our rates were so much better.
Yeah, it's a big deal.
Yeah, it was a big deal. It was like, and it felt great because you're giving your clients amazing deals. The realtors are super happy. They can't believe that you're giving them your clients that rate. And then, some of the lenders we were working with, the speed level that they were able to deliver was unlike anything we'd ever seen before. I mean, UWM specifically, I was submitting purchases, getting approvals the same day, the next day, and being, cleared with the majority of conditions by the end of the week. That changed the game for us a lot. Something that, the smaller retail institutions don't have the scale to be able to deliver that type of service and that type of speed. And once we realized that, it didn't become about comp or rates or give the client a good deal, give them what they want, book the deal, win it, move to the next one, because that loan's going to move through the process a lot more efficiently now.
Yeah. So there's two things there. There's like, and this is the single biggest thing that whenever I talk to a retailer that makes the transition, I was actually talking to Dan Larenko, who just is 2 years since making the transition. His last year at the retail lender he worked for, he closed $35 million in business. Yeah. Last year was his first full year in the broker channel. He closed over $70 million. So, the guy doubled his business just by going over. He didn't pick up any new relationships. He didn't do anything other than a situation where when he got a referral, he was able to close it and not lose it to rate. And that's kind of one of the things that, like, a lot of people kind of take for granted is that when you get in at bat, in the retail side, you can't hit singles. Like, that's not the way the game works. It's either home runs or nothing. In the retail side, you close $500,000 in business, they consider you a stud. The reality is on the broker side, you can hit singles all day long. Yep. And that's one of the big pickups. So you are saying, hey, listen, by making the transition, we were able to win more business and increase our business that way. And then the other part of it is the speed was a big deal.
Totally. Even to the point where it's like, not like you have to hit a home run in the retail side. Like, that's the only way to operate. Like that reference you just made, but it's like, you want to hit singles and doubles, because guess what? You're giving those people such great deals. The quality of those transactions typically is so much higher. They're easier transactions to execute. Those people deserve great deals.
Yeah.
Right. So you give it to them and then they wind up referring you 2-3 people. And so it just became like, it was like an aha moment for all of us once we made the transition. Like, wow, we couldn't believe that making this transition and moving to the broker side could be so impactful in terms of immediately resulting in dramatically more business and feeling great that you were giving your clients a great deal and a great level of service and speed that you could never deliver before. So, for the guys that are in retail, and I still know a lot of them in New York, and a lot of them are my good friends. I'm like, I don't know what you're still doing over there, right? You think it's good because you don't realize what it's like on this side. And it's, for us and Madison Mortgage in New York, it's trickling. People are starting to see it. And like, at first I was like trying to recruit and bring loan officers in. Now they're just calling me.
Yeah. And right now, more than ever, I think I went into this period of time and I was a little concerned. I was like, hey, the broker model, especially because I knew some of our bigger lenders, because of their size, would slow down on what they were taking in. I was concerned about it having a negative impact on the channel. But the truth of the matter is, yes, we're working with more lenders and different lenders, but the optionality is such a big deal right now. Like, I talked to a guy who's dealing with a lender that I've never even heard of before a couple of weeks ago, and he closed 11 loans with them in the last month. And he made an adjustment in his business, and he's got that flexibility. Meanwhile, I'm talking to a top retail LO from cross country over the weekend, and he's just telling me, like, I have a pipeline full of loans that basically I can't close because the rates have, they price themselves out of the market on certain categories.
Yep. Totally. And we're seeing that as well. That's a great point as well, which is the ability and the capacity to be able to send your loans to multiple lenders. When you're retail, you're in that one box and you have to stay in that one box, right? In our game, it's like, you could send the loan where it makes sense. And recently, we had some loans in pipeline that just didn't work because of overlays imposed by our primary lender that we like to utilize. And we didn't have a choice. We had to move some stuff. And you know what? At least we had that option to do it.
That's right. That's exactly right.
Yeah. Whereas before we never did. So, and I have so many guys calling me that are in retail. They're like, I can't even close this transaction anymore. Can you close it? I just want to do the right thing for my client. Right.
Yeah. So you're like literally, it's not even about anything other than just, they're not trying to make money. They're just trying to refer you a client.
Yeah, they don't want anything. They're just like, dude, close this. This guy's a great guy. And I feel like he's getting screwed. You know, can you just close this and give him a crazy deal? I don't want anything. And it's like, yeah, sure. But, you know, I'm like, why don't you just leave retail and come over and join us now? It'd be better off. Bring it with you.
It is a catch-22 because there's one guy that used to be a huge referral source. He now works at Garden State. He made a move a couple of years ago. And he used to like do all of his personal loans, his family, friends, his loans with us because we were obviously getting way better rates than the retail lender he worked for. Right. And whenever he had a deal that was like for a realtor friend of his, like he would actually give it to us. Yeah. And like it was kind of like a bittersweet thing when he made the transition because it was like, oh, we used to get 100% of the commission when you refer these deals over. Now we got to pay you. You know, it's the right thing to do by the consumer. And at the end of the day, I think that's always going to win. So, you know, we already got 27 minutes. Just want to wrap up for you, you know, any advice to new broker owners, existing broker owners, just mindset, you know, getting through the next couple months, whether it's 2 months, 3 months, you know, you'd mentioned, you know, deals are going to die and you're dealing with it. What's your thought process going through this?
You know, I think the focus has to be like focus on your pipeline, right? Literally, if you're a broker owner, like dig into that pipeline right now and figure out what you can close and what you can't, what's feasible and what's not, right? Focus on that and then focus on, you know, how do you support your team, right? What does your team need right now? Some of your originators need more leads because they need to generate business. Just focus on, you know, how do you help your team continue to be successful and continue to originate loans, and how do you minimize your exposure to your lenders? That's the other thing. It's like, you don't, you know, as a broker right now, like you don't want to close a loan that's not a good loan that's going to hurt your lender, right? Not because that's going to have impact on you or you're going to wind up giving back your commission. You might, right? But if you're a real broker in the community and the lenders you're working with are really your partners, you want to protect them too, right? You don't want them exposed to loans that are going to jump into forbearance or become problems. So, you know, get forensic, get into your deals, talk to your borrowers. I can't tell you how many employers I've spoke to in the last 2 weeks, literally calling them, talking to them. How are things? Are they impacted by COVID-19? If you're not, and then just be transparent with your borrowers. Like, hey, here's what's going on. The rate environment's dramatically impacted. You know, this is what it's going to look like. It's probably going to take 60 days to come out. This is what we could do to close now. This is, hey, you don't have an option to close now. You need to get back to work first. And once that's on, we'll keep your loan open and we'll resume. And I think it's just about communicating, digging into the details, focus on pipeline and focus on how do you make your team continue to win. It doesn't matter how much money you make right now as a broker owner. It only matters that your team is solid, that they're getting paid, your staff's getting paid, and your LOs are still making money. That's it. Yeah, at least that's my focus.
Honestly, I think that's the right mindset. It's not about being, you know, making all the money in the world right now, you know, getting rich. I think right now more than anything, it's picking and choosing your battles. And like you said, you know, it's living to fight another day and keeping your team, you know, in a good position to pay their bills and stay successful.
Totally.
Well, Shah, thank you very much. We appreciate your time. We appreciate everything you gave. A lot of positive comments here from everybody. So thank you. We really appreciate it.
Thank you, man. Have a great day. Appreciate all your help.
Take it easy.
Okay, man.